All right, everybody, this is Jeff Scott, and welcome to take 2 of my weekend review. This is August 30th, 2020, and for those that don't know, my email address is hgsidoc@gmail.com, and thank you for joining. If you're watching this on YouTube, let me just ask a couple of quick favors of you. Just open up my Chrome and show you something or ask your help. So in YouTube, if you're going to watch my videos, a couple of things. When a video starts, please hit subscribe. That way you'll get notification if I post something. I don't keep a mailing list. I don't have no interest since I have nothing to sell you. Why would I care? So if you want to know, if you're not getting this on the HGSI board, you might want to hit subscribe. While you're watching the video, if you like what I'm doing, hit the thumbs up. If not, thumbs down. If you have a comment, as long as it's clean, positive or negative, please put it in here under the comments or email me. And the other thing is this little gear here, if I left click on that gear and go to quality, I can adjust. Now I'm doing this in 4K. It takes a while to upload into 4K, but it's something that you may want to adjust if it looks bad. Now, if you don't like the view on YouTube because it won't be as sharp necessarily as downloading the video, there will be a link under remarks that will have my Dropbox link. All right, so I entitled today, The Markets Take the High Road. Last week I talked about 3 scenarios. We'll talk about them at some point today, and the markets were up nicely on the week. This is for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. I am independent. I paid for all the tools I talk about, and trading involves risk, and you alone are solely responsible for any decisions you make. I always title my training, Be Your Own Guru, and the point of that is simple. Find smart people. These are some of the ones that I've learned from, and then put what you learned together and come up with your own way of doing things. For me, I call that Be Your Own Guru. Who taught me that? The master himself, who would say in his amazing English accent, "Jeffrey, I'm not a guru. I teach you to be your own guru." Then he'd ask for my first million. I miss him, Ian Woodward. What a great man. What I need on my desert isle, I need TradeStation and Thinkorswim, and I need the specific indicator packages and strategies I have. I use HGSI and EdgeRater as analytic tools, usually after market hours. Q tools, Dr. K tools I find to be very valuable. Now, from time to time, people will ask me to refer them to the people who I bought the tools from, and I want you to make sure you know that I never am paid by any vendor when you buy something that I suggest. If that vendor has offered me an affiliate fee, I ask them to pass it on as a discount to you. I am an unpaid, truly unpaid volunteer, and this is just education. The website for HGSI, of which I have no financial or control or voting interest, is here, highgrowthstock.com, and the 2 key places to know are investing strategies, where there's thousands of movies, and under free 30-day trial, you can sign up without having to give a credit card. Stock patterns are cyclical. I talk about this every time. Well, I think about it every day. I don't care if I'm looking at an index, an industry group, a stock. Where are we in the pattern? And every time I think we're rolling over, we go higher, and that certainly happened again this week. Now, I am still net long, but I have started to raise cash. I have smaller positions, and I have sold some premium. Why? Because I do think there's some uncertainty here, and I may start to look at some bearish positions if I think the market starts to roll over. If I look at the sector review on Friday, it's clearly more green than red. If you look closely, real estate, healthcare, utilities probably have more of the red, as does the financials. But a strong market, a strong week, good week for my portfolio. If I look at the individual markets, let's just blow this up very quickly and go through this as fast as reasonable. When I see that white balloon on the Friday on an annual chart, what does that tell me? It tells me that we hit the high of the year, closing high of the year, highest point of the year on Friday in the E-mini futures. This is the all-time high on the E-mini futures. It is hard to be bearish at all-time highs. 17-day above the 50, above the 200. An orderly fashion, a little bit above the 17-day. Doesn't even look wildly extended at this point. It's had a long run, but I've seen it worse here, but we shall see. I guess this is less extended when it's tighter here. So that's the E-mini. By the way, it is extended. I'll show you that in TradeStation. The NASDAQ futures, the all-time intraday high was on Thursday, but the all-time closing high was on Friday. Again, a beautiful bullish pattern, not much more to say. The Dow futures, let's make it look the same it did. Not at all-time highs, still has a way to go, but it would be hard not to call this a bullish configuration with price above the 17, the 50 golden cross has occurred above the 200. The Russell looks a lot like the Dow, not much more to say, new buy signal there. And then the VIX, the VIX, it's not doing anything, and that may be telling us something because it's not doing anything despite, it's much higher than the prior resting areas, and with the big moves in the market and the all-time highs, not seeing any move in the VIX is kind of interesting. And what has been weak has been the dollar, which we'll look at real quickly. And after maybe end of last week suggesting it was going higher, it just turned right back down. And you notice it's not yet at the annual lows, but it's getting pretty darn close. So the markets, they look bullish, don't they? It's hard to believe, and just because the markets run a long way does not mean the fun has to be over. And I keep reminding myself that extended markets have a tendency to get more extended. On the weekly charts, not much more to add here. You can see the all-time highs again. And look at the strong weekly move off the doji on the prior week on the Dow, and the reversal here to the upside on the Russell. Underneath, rates crept up as Fed changes policy on fighting inflation. Wasn't it nice to hear them say that they're looking for an average of 2%? And the only way they're going to get to an average of 2% is letting inflation creep up before they raise rates. If you think back in the past, they started raising rates long before we saw much inflation. If you look at AD lines, there's clear divergence. Look at the 1,000, the large stocks, the Russell 1000. Notice how the IWB, the Russell 1000 index, is at all-time highs, as is its AD line. Compare that to small and mid stocks, the Russell 2000. The index is well below the highs, and you have not set new highs. So you have divergence there. And if you look at the NYSE, you have not set new highs on the NYSE, and you can see the strength here. In yellow is the spiders, and then blue is superimposed. With it is the Qs. Diamonds aren't so bad, and here is the IWM, the Russell 2000. And notice the one thing that turned down here was bonds with rates going up. Breadth improved, and you could see stocks above the 200 and stocks above the 40-day SMAs. Note that you still have over half the stocks in the market below the 200-day SMA. 3-month new high, new low has crept higher. This is a very short-term reversal indicator. It still has a little ways to go, but it could trigger that sometime soon. Maybe a kink in the armor of someone who thinks this market will just keep going and going and going. Now, another kink would be divergences on the summation index and the oscillator. As you can see on the daily, McClellan the S&P sets new high, and these are clearly lagging on both the daily and the weekly. This is just what I've learned from John Person, the things I'm looking for, and clearly we have a bearish divergence. If I look at current buckets, you can see that we've improved. 60% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. Here is the spread, more bullish than bearish, but no signal, not extended. If we look for evidence of a Hindenburg Omen, we could see that there's no evidence of a Hindenburg on either the NASDAQ or the NYSE. I would not expect one until we get further into new high territory. Market tone is decidedly bullish, no surprise with what we've seen in the market. And rather than look at sector strength there, let me call up one of my favorite tools, which is Edge. Let's go back to the home. And the Edge is something that's running on one of my machines all the time. My biggest disappointment to share with you is that it does not run on TradeStation, Thinkorswim, or Interactive Broker Data, nor HGSI, Telechart. It requires Thomson Reuters as a data feed, and a real-time data feed will cost you about 3 times what you pay for HGSI. Although I think Sager has deals every once in a while on his website. But what an amazing tool. This sits on one of my computers, and I watch it all day long. It tells me how the sectors are doing, and you could see on Friday, the last 2 days, the last week, overwhelmingly bullish. 1 week, 2 weeks, and a month. 2 weeks, not this week, but the prior week was not as bullish. But over the month, we got 10 out of 11 sectors are positive. But even more important, it's these pie charts here giving me a sense intraday of the winners and losers in the market. And when I see most of the sectors doing well and the index is doing well, and these red stocks piling up, I know that this market is probably a little stretched and is going to pull back. Now I can look further at sectors, and let me, hold on one second. And I can rank them by, I guess, relative strength of what the strongest one was. And you could see it was energy followed by discretionary and information technology. I could also look at sector percentage. Now, when Monday starts, what we did on Friday, which is green, will be 1 day old, and Monday will be the real time. When Monday ends, then Monday will move into the 1 day, and this will be blank until Tuesday starts. So 1 day performance, if I look at the big move, 2.21 in energy, even financials, which were laggards, were positive on the day. Now I could say I'm interested in those top 3 groups, show them some love, and hit the gears. And what I'll have here is the various industry groups in those 3 groups will pop up. And let's just rank them on 1 day performance. And let's look at the top 5. Look at that, refiners too. That's the top 6, showed some love. And now let's look at what stocks in those groups are in the S&P 1500. And these are the stocks in those groups. And then in ice hockey, at the end of the game, they have the 3 stars to show you the best of the best. Well, let's see what the 3 stars show me. And the stock that pops up again is Jack in the Box. So we may want to look at Jack in the Box. So since I use TradeStation, I know it's JACK, but the symbols for TradeStation are all the way over here under ticker. So I could take that and, for example, I might drop it into my charting platform and see if this is something that I'd want to buy. This is fundamentally a leader and undervalued. And on the chart, it'd be tough for me to be jumping in here because even though it's undervalued, it's right up at resistance. Now, a break above that might be interesting. More charts to follow. So I find this tool to be incredibly useful during the day. Now, the insight part actually is running during the day and giving you an idea of best and worst performing stocks with various parameters. All right. Now, let's go back to my PowerPoint. And by the way, I'm not using a PowerPoint because I'm trying to be a teacher. I'm using a PowerPoint because it's quicker, and these are all shots that I took today. Week in review. This is an EdgeRater tool called the Warehouse Report, where I take a snapshot of the market that closed Friday on 8/21. And then based upon the fundamentals at the end of the week, I asked, how do they impact on performance? Last week, it was lower left, upper right curve, and that showed that growth was in control. Well, this week, it's the opposite, although pretty much everything was positive, but junk was in control. What do I mean by junk? As you go further to the right, you get higher earnings per share rank. As you go higher, you get higher returns. The biggest returns were in the lowest earning stock. The biggest returns were in the lowest relative strength stock. The biggest returns were in the distribution stocks. So this was not a week for growth. Yet, despite that, when I go over and look at the group performance analysis from Friday to Friday, end of day to end of day, I can see I had a good week. I was up 2.67% in this calculation, which is just a rough measurement. But I can compare that to the IBD 50 that was up about 2.97. The S&P 500 was actually the winner, up 3.26. Again, the crap beat the leadership. And the Market Smith 250 is another thing I like to look at, was up 1.49. So it was a strong week in the market, but not necessarily led by the traditional leadership. Now, the Canaries had a great week, and then on Friday they sort of stalled. They had a red candle high. What does that mean? It means that the stock traded, this little line up there, to the highest high, going back to the left at least 10 bars. It meant that it closed below where it opened, so it's red. And that's called a red candle high. That can be a reversal sign. Now, a red candle high occurring at the all-time high has got to be a little bit concerning. So does that mean the party is coming to an end? I don't know. Probably not, but we'll see. Probably more related to Apple and Tesla splits. If you look at the news this coming week, it's a big week for employment. As John Person likes to refer to, the monthly unemployment report on Friday, jobless claims on Thursday, ADP employment on Wednesday, nothing on Monday, and a little bit on Tuesday. Big news week whenever you have the monthly unemployment report. Also still a big week for earnings. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. If you like this picture, just go to Twitter, put in earnings whispers, and this will pop up every day with commentary at no cost. So you got retail here. If you look at things like At Home, Shoe Carnival, Five Below, a couple others. I saw Michael's here, Duluth Trading, Signet Jewelers. You got some technology. You got some clear players in the COVID economy. You got Zoom, you got Cloudera. Here's CrowdStrike. I'll have to decide what to do with that one. Smartsheet. So it's still a big week for earnings. Market thoughts. Markets put in another strong week. Fed doesn't disappoint. Vaccine stimulates. Big tech leads, but some softness on Friday as Apple and Tesla get ready for the big splits. When there's good vaccine news, you see rotation out of tech and into casinos, hotels, restaurants, and airlines. And I know my buddy T.G. Watkins, who I talk to every once in a while, he keeps getting excited. And I keep saying it's because the vaccine news was good. Someday they're going to break out. Is this the time to buy them? It might be. Many of them are on my buy watch list. So we'll look at some of those in a bit. On the year, in red here, because the Dow now turned positive. So everything but the Russell are positive. The NASDAQ leads at plus 30%. That is a whopper of a year, and we're still in August, folks, almost September. And the Russell's almost back to normal. It's only down 5%. It was down over 30 at one point. News will continue to dominate. And I don't know if I should be talking about my portfolio, but since I've been doing it, I keep doing it. So I had another good week. If I take out the money I spent on January 15th for taxes and my annuity, I started the year with $1.4 million. I am now up an additional 2.15 on that 1.4 million. So I had 150% plus real money return on my actual account. I have many accounts. This is my most aggressive trading account. The investing accounts I don't look at every day, but on my trading account I actively manage it. I'm still long. That said, I've reduced my margin and raised cash. I was intrigued by the resilience of the VIX, again, something that TG and I spoke about, and started to nibble on some volatility instruments. I plan on continuing to be in the market, but I'm getting smaller because I want to protect my profits going into the election. I do well in the market. This is beyond well, and I want to protect profits. I'm building a new house in Santa Fe, and I might as well use that money, not give it back. In fact, there's my view, my porch, which is being built right now. You've got the Badlands over to the left, the Sangria Mountains, I can't say the name, I'm going to have to learn it, over to the right. There'll be nothing built anywhere. I'm at the top of the mountain, so it goes straight down in my backyard, and I'll have a great view as long as I live there. A little bit hazy this week because there's been a fire. I'd like to quickly look at TradeStation just to get a sense of these markets. And for those who've been here before, I do the same thing every day, every week. So let's go start with the E-mini futures. 6 points. Number one, is it in a buy with a green arrow or sell with a red arrow? It's a buy on daily, weekly, or monthly. Put a win in the bulls. Is the paint bar, is it green, blue, or red? Green means I should, and bullish, it's an elder indicator, impulse indicator. I could be long or holding. If it's red, I should be short or holding, not buying. And if it's blue, it's neutral. I can do whatever I want. So it's green across the 3 time frames. Another line for the bulls. Where is it within the envelope? It's up at the top. It can run around there for a while, but that's at some point that will correct. Those red dots, those are bothersome. That shows that the MACD histogram here clearly has bearish divergence. You can see how long the uptrend has been. This is the weekly bongo, has been green. People wonder why some people would use this as a timing method, because it gets you in pretty darn early. Didn't feel early here, but you've had a major run since it started. And then the concerning part here is the high jump is at 98%. So this is an extended market. When the high jump gets this high, I start to expect something like this to happen. Not necessarily a sell-off like we had in February, but a little pullback for refreshing. It doesn't have to happen on Monday or Tuesday, but I see a lot of signals that at least a pause to refresh is probably coming. Not giving up the bull yet. The Dow, buy, 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 green, 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 same red dots, green, only 70%, so the Dow's not as extended. The Russell will look a lot like the Dow, 43%, and then the NASDAQ will look like the E-minis, again, above the envelope with MACD divergence, in a buy, green bars across, and we're at 95.3. So I'm a little concerned, again, like I was last week, by the S&P and the NASDAQ, and they're a little bit more extended. You want to see something negative because everything I showed you looked positive? Well, we just got to look at the dollar. A new sell signal on Friday, and its high jump is at minus 75, not quite at a level where you expect a bounce. If the dollar's weak, then I bet gold jumped, and it did. Big move on Friday with the new buy signal on gold, nowhere extended. And silver also had a big day, although a little bit less of a percentage gain than gold. Next, I open up HGSI, and let's go look at Major Markets Plus. Highlight that, hit the warehouse view. If you watch this and you micro watch it, you notice that I've now got 28 instruments here. I added one, and you'll see it come right up to the top, I bet, this week. Maybe not. Where is it? There it is. It's number 10. It was at the top on Thursday. I added a FANG ETN just to show you the outperformance of the FANG. So on Friday, NYSE and small caps led, as did gold. NASDAQ was good as well. And down here, gold miners outperformed gold rather. S&P 500, 100 down towards the bottom, along with treasuries, the dollar, utilities, and volatility. So that should translate to a good week for a high growth stock portfolio, even though junk actually outperformed. Let's take a quick look at the major indexes in HGSI. I started doing these programs sort of as the unpaid HGSI user trying to help new users, and I still use HGSI every day in my trading, and I still like to use it on these programs. It is a fantastic program, and it keeps getting better. So S&P 500 all-time highs, we already know that. Weekly bongo remains green, as does the daily bongo. I don't want to look at that view. That is an old view. Let me go to this view. Here we go. So weekly bongo, you can see the high jumps up at the top. We already know that. Been in a person buy signal since here. No recent kahunas or phoenixes or eurekas. Nice steady uptrend. It is extended. You can see the weekly and how far we've moved from the prior highs. So what is my three-road scenario here? I mean, it's pretty simple and probably not worth spending a whole lot of time discussing because, you know, does the market just keep going off to the moon? That's what it looks like. Does it break down here and pull back to the 200 and give a major test over here? Or does it pull back and start bouncing around here? If we get a pullback, that's my belief, is that we're going to get a modest pullback, pause to refresh. I don't think this market is done yet. So high, middle, and low road scenario, and I'm prepared for that middle road, but I quickly can adapt to the higher low road as the week goes by. That's the S&P. Continuing on, the Dow Jones Industrials. Again, a nice uptrend. It has not taken out its prior high. No big signal change. Not a whole lot to add from last week. The Russell. Again, like the Dow, this one's gone sideways a little bit, had a positive day on Friday. This is the laggard, but even the laggard is sitting up at the 17, which is above the 50 and 200, a perfect place for a bounce. And then the NASDAQ, whether I look at the NASDAQ composite, approaching 161.8% retracement on the Fibonacci's. Is that where we get reversed? Would it really surprise anybody if we get a pause here? Or I look at the NASDAQ 100, same pattern. It's interesting how much this index, I mean, who would have believed this in the throngs of that market pullback? How much this index has recovered, and it's already blown past their 161% retracement. Unbelievable. NASDAQ 100. These don't go up forever, and the only thing to be bearish in these pictures, in my opinion, besides the McClellan and its bearish divergence and the MACD divergence on the TradeStation shots I showed you, is we're getting extended, and markets have a tendency to stop getting extended at some point. All right, so continuing on in our little review, if you have a growth stock portfolio, it might look a lot like the IB50 ETF, and a nice run up, starting to slow its ascent. Inside day on Friday after a bearish day on Thursday. Red candle high on Thursday. If you look at the IBD breakout opportunities, looks a little bit less. This one rose quicker than the IBD 50 ETF. It's going sideways here. And you want to see what strength looks like. Here's the micro FANG index. A red candle high on Thursday. Not too bad on Friday. Again, it'll be very interesting to see. Now, why does this look different than the Canaries? Because it's got additional stocks in the Canaries. But the story is the same. And we can look at the dollar very quickly, and you can see a dollar just really getting down to, at least annual lows. Going back, this is 19. I mean, when's the last time where the dollar is at 24.9. You're going back to October 2018 on the dollar. We look at the VIX, again, resting higher than before, not doing much, but holding up despite all-time highs on the market. So that's something. Gold, it doesn't look that exciting, except it closed near the high of the prior day. Is it done going down? Gold miners seem to think so. Look at the gold miner move. And a number of gold miners looked interesting on our review. And silver, a number of small silver companies also looked interesting. So that's the market. Now let's look about stock leadership. We are at 30 minutes. So I'm going to try and get this done at 45 today. So let's go to group 7, warehouse view, 175 groups. And let's look at the 2-day up, 75 groups. That's very bullish versus 2-day down, 6. What's in the down? Autos, food, package, private equity, healthcare supply, and institutional brokerages. And notice that on the ones that are down here, 1, 2, 3, 4 of the 6 were up over 5 days. And Tesla was down hard on Friday. Again, probably getting ready for its split. And that's the only reason it sat there. So there's very little of concern in this group. I mean, food and drugstores are probably anti-COVID in that if COVID vaccines are doing well, people aren't going to be stocking up at Walmart and other food stores. And if COVID vaccines are bad and it looks like we're getting a second wave, I'd expect those things to do better. So market is anticipating improvement, and therefore food was low, packaged food was low, and the healthcare supply chain probably pulls back because of that as well. If I look at a longer time frame, 5-day down, I have 25, and 5-day up, I have 69. So this market tenor clearly has changed and has become much more bullish. Ranking them by raw 2-day force, and let's do a right-click, change the index group, renewable energy. So I'm going to go through the first 5 today, then I'm going to look at my buy watch list and probably call it a day. So what I wanted to do here was what? I wanted to change this to a daily chart. Okay, that's what I want. And I want to open up a weekly chart. That's what I want. And I want to double click on this first one. I don't know VVPR at all. I wish I was in it. It ran from early in the week of 2 all the way up to 8, closed near the high. How do you chase this stock? I don't chase this, not my style. Here's a stock. If you look at volume, how is that not changing? Oh, it's changing down here. Volume down here is 11,000. Here it's 79,000, 294,000, 79,000, 414,000, and yesterday it was 32 million. These are story stocks. There must be a story about this. I don't chase them. Typically they'll come back, bounce around, and maybe run again. That's when I get interested. If you're a pure Momo Robinhood player, jump on board. You could see there was tons of accumulation in this stock on Friday. Not my stock. Canadian Solar, different story, more gradual run up. Viable gap up on Friday. Earnings are out. Strong group with a kahuna. I'd rather buy it closer to the 50. Sunrun, this shows you what happens with these stocks. Big move here, off of 9 all the way up to 54 since March. Solar Edge, this has been the leader of the group. Pull back here, new person buy signal. It's pretty high up and extended. I'm in end phase here, sideways move, would like to see momentum. Had a mobile breakout from a squeeze. I need to see a kahuna. Vivint. First Solar, another great looking chart here. Is it too late to get in? I think so. I'd rather wait for a pullback. Jinx, on the other hand, sort of a cup, handle, breakout, mobile breaker from a squeeze, kahuna, pocket pivot. This one looked interesting to me as well. So solar is up. In my history, I've made a lot of money on solar stocks. I've also watched a lot of it go. These things can turn on a dime, so be careful. Newmont Mining in the precious metal category. Buying it off the 50 is never bad. Not ready to buy it right now. I don't see a whole lot of momentum. It's below its PSAR dot. I like some others better. Here's one, Harmony Gold. Break above that chandelier. I'd be in it. Mobile breaker from a squeeze, kahuna. This is what I want. Uptrends, pull back to the 50 and break out. Here's the index. Barrick Gold, I'm in this one still, now going sideways. Gold Fields, I've traded out of this. I'm looking at buying back in. Got to break above that chandelier and that PSAR dot to get a mobile breakout and a kahuna person buy signal. Kinross also looked interesting. Pan American Silver. Fortuna looks even better. Pullback, breakout, took out the chandelier, mobile breakout from a squeeze, and a kahuna. I like Fortuna Silver. So plenty to like in precious metals. Airlines. Okay, now we're getting into the junk off the bottom. Look at the fundamentals. Do you see a reason to like that? I don't. Look at the stock pattern. It's garbage. Why would you be buying these things? You'd be buying them if you believe that we're going to be able to do an instant COVID antigen test and that everybody's going to start flying again because nobody will have COVID on the plane. And if you believe that, and I think some people are starting to believe that a year from now or 2 years from now we're back to normal, then this is a $50, $60 stock. So if you buy it here at 35, you may double in the next year or two. I'm just concerned about when. If I look at Delta, this was a great stock before the market collapse. When? American, when? Southwest, looks a little bit better, got that 200 overhead. Fundamentals are horrible. When? Alaska, this is probably the one I'd be interested in, and the one I'd be interested in if I wanted to nibble is because there's still a little ways of room to that 200. You have 3 kahunas in 5 days, which is always a big move to me. You've got a mobile breakup from the squeeze just on Thursday, pays a small dividend, it's under demand. I like Alaska Air if I've got to buy an airline stock. JetBlue, I like Alaska Air. Cruise lines, same story as airlines. At least we don't worry about them going out of business as much now, the cruise ships. Okay, you had a good day here. I know TG's excited, but how far is it going to go? Now, clearly, one day it's going to do this. It's going to run up to that 200. It's going to test and break right through and go back up to where it used to be. Is this the beginning of that move? I have no idea. And just like the airlines, at some point I might want to nibble on one of these. Carnival has pushed back starts of some of its cruises. I don't like that. Royal Caribbean is already moving. Do you want to buy it when it breaks out above the 200? Maybe. Look at the demand, supply high, and the 3% dividend. Maybe you want to buy it now. Norwegian, no. So of the 3, I like Carnival. I like Royal Caribbean, rather. Semiconductor devices, these have been a leader. NVIDIA, I played this run for a while. I'm out of it now, kicking myself. Good fundamentals, high PE though, minimal dividend. How high does it go? It's at the high jump bar. AMD is going sideways here. Great earnings per share growth, but also high multiple, under demand. Marvell Tech, based from June through the end of August, and breaks out on Friday with a kahuna. This one looked interesting to me. Look at the fundamentals are strong. Intel, old play, Qualcomm setting new highs, Micron, and others. Application software, I guess I'll go to all 10. Good, great play. Tough to buy this here. Workday, big move on earnings. I was in Salesforce. I'm out of it now. I took my profits. It's way too expensive. Had a big earnings run. I was glad I was in it. Adobe is broken out. These are great stocks, but when do you buy them? I'd rather buy them here then here. Now, I did buy Zoom back there, and I got out of it already. I didn't want to be holding it into earnings. I may reevaluate that huge earnings per share growth expectations, but also a huge multiple. Everybody's coming out with video conferencing, but we use Zoom at work like so many others do. But we also have WebEx too, so equal opportunity. Anaplan broke out this week. I think we talked about it last week with this day here. Looked interesting. Slack, it's a laggard. It doesn't have great earnings per share growth, but the group has been pretty darn strong. I'm just looking for something that I can buy right now. This might be it. This is a pretty good pattern here. This is Digital Turbines. It got overbought, came back down. Dan Fitzpatrick calls that a phase 1 breakout out of a squeeze. Pullback is phase 2, and then phase 3. I think we might be starting phase 3. I think this is interesting. Look at the demand, look at the earnings per share growth. I wouldn't buy it until it took out at least yesterday's high or Friday's high. Because who says it can't just do this for a while and ultimately do that? So if it takes out this prior high, I might give this one a whirl. Cloudera has earnings this week. Also looks very interesting, sort of a cup, a handle breakout, level breakout from a squeeze, pocket pivots, kahunas, PMC is good. That looks interesting, but it's got earnings coming out this week. Restaurants, put this with casinos, cruise ships, and airlines. Dave & Buster's, bottom fishing galore. Is this the breakout that matters, or is it going to be like all these other attempts that failed? I don't know. It's interesting. Look at the demand. Is that just Robinhood, or is Starbucks has broken out? Double kahunas, that always gets my attention. Steak Shack I liked last week, and look what it did. 1, 2, 3, 5 days in a row. Higher highs, higher lows, nice uptrend. That was a big pickup. I don't love the group, but the group looks good. Cracker Barrel, Cheesecake. Again, somebody must believe that this Chipotle is just out of this world, that this COVID stuff is over, because restaurants are acting like it doesn't exist. Computer hardware, that's a weird one to be up here, but Dell had great earnings. You could see a Bible gap up from a squeeze, mobile breakout, person buy, getting extended for my taste. Here's the casinos. So, is this the time that Wynn is going to go back to normal? Does it break above the 200, retest, and go up? Boy, then I can buy it here. That's when I want to be buying it. All right? Or is it going to hit that 200 and fail? I'm not jumping into this. I think this is the prevailing story until it's not. That's Wynn. MGM did break above the 200. That's interesting. I'm in Caesar right now. Las Vegas approaching the 200. Caesar's up. I'm not sure how much of this is from its merger with, who did it merge with? So quickly I forget, because I own the other stock. But I'm holding my Caesar right now. Again, hope about COVID. So lots to like in there. Maybe not lots to like. I think that COVID story remains critical. Here's my buy watch that I put together on the week. And there's a couple of different stories. So biotech. Biotech showed some interest to me. I think my friend Kathy still owns Halozyme. I'm probably buying it on Monday. Sideways move, mobile breakout from a squeeze, new person buy signal, Pocket Pivot, Kahuna, great earnings per share growth. Earnings are not to November, so they're already out. I think Halozyme looks very, very impressive and interesting here. IntelliTherapeutics, I don't know much about this. NTLA, fundamentals suck. But here's a stock, sideways move, breaking out above the 50, mobile breakout squeeze, Kahuna. It's the thing I like to buy. And the beauty of this is the buy, let's open up the high on Friday was 21.46. The low on this day was 19.74. So it's still $1.70. So it's about an 8% risk. But I could set my stop there, and I know that I've given it plenty of room, and if it takes that out, I don't want to be in the stock. So this one looks interesting to me. Iovance, sideways move, breaking out. Weekly bongo just turned green. 2 kahunas in a row. New John Person buy signal. Mobile breakout from a squeeze. Don't know anything about Wave. Just was an interesting looking chart. So I did like some of the biotech. In the casino world, Boyd was probably the one that interested me. Note I'm already in Caesars. Why? Because it's already broken out above that 200. You're about to get a golden cross. And my hypothesis is perhaps the state, local casinos that don't require travel, that don't require a big Chinese presence, maybe they're the ones that are going to bounce first. What else did I like? I mentioned Alaska Air. Calyx is a application software. Big uptrend, sideways move, and a breakout perhaps out of the flag on Friday. Kahuna, pocket pivot, new person buy signal, and a mobile breakout. This one looked interesting. Great earnings per share growth, but it's a high multiple stock. Anything? I'm just going through to see if any of these. Alpha Pro Tech. I've never really been a lover of this stock. Then I saw these fundamentals. All right. Ian used to teach us about gas in the tank. If this is accurate, you're going to lose the June and September quarter and replace them with these. 73 and 46. That's $1.20. Replacing 6 cents. $1.20 plus 46 is $1.66 plus 39 cents would be $2 and a nickel. It trades at a 16 multiple. If the multiple stays the same and it hits these earnings, it's a $32 stock. So I'm not buying it yet, but I'm going to watch it because this thing's got some gas in the tank coming. Now, of course, if it misses its earnings, it'll falter. And what does Alpha Pro Tech do? They make gowns and PPE, things that would be necessary for protecting people when we get our second round of COVID. Tupperware was a stock that I had interest in, and I still do. I don't have interest in the product, but sideways move and a breakout here. This looks kind of interesting. It cleared its PSAR. At Home is one I looked at a few days ago, and my wife talked me out of it. Thank you very much, my lovely wife. Her nickname is Troll, but if I called her Troll on this, she'd probably get mad at me. But you could see it pulled back last week after she told me not to buy it, but it's setting up again. Anything else that popped up? Pinterest, I have no idea what they do. It's a social media play. Sideways move, mobile breakout from a squeeze and a kahuna. Sort of a anti-COVID story. If the COVID news is bad, then testing goes up. And what I liked about this, let me clear off all my scratches. I'm not buying it here. So FOMO friend around the corner, I'm not buying it here. But it bounced a lot on the 50. It just pulled back to the 200. It's touched it twice. It's got good fundamentals. There's some question, there's been some short sellers pounding the leadership. So I'm not saying go all in, but I'm going to look for some evidence that this thing's got momentum to the upside, and I might play a little bit. Jabil Circuit is another semiconductor stock. It's going sideways, but it had a mobile breakout from a squeeze and a kahuna, so I might be watching that as well. Repay. I'm not chasing PayPal or any of the other high-price payment methodologies, Paycom, but I am interested in Repay Holdings. It's a new company, low dollars. Trades enough shares for me to buy it. Run up, sideways move, and a mobile breakout from a squeeze, a new person buy signal with PMC moving up on a sideways stock, a pocket pivot, and a kahuna. This looks very interesting, and I may be looking at that on Monday. I showed you the gold, the solar. I mean, a number of restaurant stocks looked interesting. This is Dave & Buster's. We talked about that already. The other one that looked good, well, a lot of them look good, but here's another one, Red Robin. I like their chicken, so what the heck. But again, is this a growth stock? Is this what I want to be owning? It's what worked last week. And again, is it done going down? I don't know that. So, and then here's one I already own, FIS, which started a run on Wednesday. 3 kahunas in a row draws my attention, and this is a consumer finance play. So, interesting market. It's been ridiculous. I've never had an account perform like this. I've never been at home for COVID, so maybe that's the story there. At some point, I'm just ready to sell everything because if the Dems come in, capital gains tax will get higher. Most likely take all my money off the table and wait and see the election. Probably won't do that, but I think about it more and more. Y'all have a great day, great week, and I'll talk to you next week. And probably will not come out until sometime on Monday because of the holiday. Goodbye, everybody, and thank you for watching.